I'm Josh Duvall, certified financial planner, registered tax preparer from Joshua Duvall Financial Planning and Accounting. I wanted to talk to you today quickly about tax planning versus tax preparation. So I'm a certified financial planner. I'm also a registered tax preparer. One of the things that people ask me a lot about is related to their taxes. And hey, do you do tax returns? Can you do my taxes? Okay, so here's the thing. When you do someone's taxes, when you get your taxes done, what you're getting done is just a record of events that have already happened. And apart from a few caveats, a couple exceptions, those things can't be changed. They happened in the past, and a tax return is just a formalized record of things that have already taken place. Now, obviously, there's value in tax returns, right? We have to file a tax return every year. Businesses need to file a tax return, and how you structure your taxes is important related to getting your returns done. So I do taxes for not only my financial planning clients, but also tax preparation and e-filing, both state and federal, for tax-only clients. So there's value in that. I'm not putting that down. But one thing I wanted to comment on was the difference between tax planning and doing a tax return. Tax planning is taking advantage of the tax code so that you can have a more advantageous or efficient way to mitigate income taxes. Now, there's things people might use the word loophole, but the reality is the IRS tax code is about 73,000 pages long, and there's lots of different nuances related to how income is taxed and decisions that you can make related to other types of financial things that you have going on to take advantage of those laws. One of the things that people ask about often, and it's been in the news lately because they were trying to phase it out as part of the Build Back Better agenda, which didn't get passed last year in 2021 at the end of the year. So, who knows if it'll still be on the table in the future. But some of those strategies that people call loopholes would be things like Roth IRA conversions or backdoor Roth IRA contributions. Those are specific strategies for high income people that can't qualify for a Roth IRA. Another thing that might happen related to tax planning would be, and I've talked about this a lot, funding an HSA. You can qualify regardless of your income for annual deductible contributions up to $7,100 a year for a family into an HSA. And that health savings account can be invested just like an IRA. And at age 65, the money becomes qualified and is treated just like an IRA. So it's a way for people who have higher incomes to be able to qualify for tax deductible contributions. There's things like donor advised funds if you're into charitable giving, and that's a large piece of what you do. There's lots of strategies from a tax planning standpoint that can offer you efficiency, tax mitigation, sheltering of income. And we haven't even talked about rental real estate or having other businesses, S corps, pass-throughs, all of those types of things. So the reason why I bring that up is obviously, we're here in the month of January. Tax season is right around the corner. You're going to be getting your W-2s and all the tax forms for your return. And that's important, right? And I'm happy to help you with that. But the next level of that is really tax planning and in advance making decisions before the end of this year, December of 2022, that would actually allow you to take advantage of things that would be beneficial either in the current year or to provide you tax efficiency going forward. So if you have questions about your taxes, if you're looking for more than just kind of doing your taxes on TurboTax, you want someone to give you a fresh look at what it is that you're doing from a tax return standpoint and also talk about tax planning, I'd be happy to have that conversation with you. You can go ahead and shoot me an email, josh@joshuaduvall.com. I'd love to hear from you. I hope you have a great day. Thank you so much. Bye-bye.